Hey traders, this is Scott Barkley with ProAct Traders, and I do a lot of videos to help retail traders get better, and just finished this one, so you might want to take a look. Keep them nice and short so they're understandable, digestible, and they really help you. I'm the author of the Empowered Forex Trader, Strategies to Turn Pains into Gains, available on Amazon. Have 24 years experience trading and training in the Forex. So maybe I got something that's worth listening to. Hope this helps you. Hey traders, this is what to look for before entering a trade. So remember, the trader must anticipate the market. So how do you do that? Well, you got to have a plan. You got to be looking for specific things that will help you determine a business plan for your trade today, right? Remember, this is a business. This is not, a hobby, right? So don't make it hard. Keep it simple. What I'm going to show you is a little complex, but each piece is simple, right? The first thing is knowing the market structure of the pair. Is it ranging? Is it trending? Is it choppy? Or is it smooth going? What is the dollar index doing today? Strength or weakness? And is it at a turning point? So the dollar affects 88% of the market. If it's going up, correlated currencies go against it. Correlated currencies go with it. You have to know that. We'll discuss that. What barriers are in the way to the targets, and are there wide open spaces between these barriers? What are the targets today? Fib extension, fib sequence, or ATR? What is the initial trade setup? Break, hook, and go, close and reverse, or before you enter, let it center. Now there's a separate video on this, so you want to check that out. We're not going to go through the entry on this video. Where's your bailout zone? If you don't get it right, or the dollar index flips on you. All right, so let's tackle each one of these separately. The first thing is knowing the market structure of the pair. Well, the market only does a few things. It trends, which is rare in the Forex. It ranges, it does sideways moves, or it reverses. If it's trending, which also includes channels on the 60-minute chart or higher, you trade only in the direction of the channel. All right. You want the pullback behind you. If not, it is in your future. In ranges, you trade both directions in harmony with the dollar index correlation. In sideways moves, go take your significant other to lunch. Stay out until the market shows the trajectory. In reversals, count the money in before the reversal. This tells you if they can just turn, do a double or a triple top. That would be a head and shoulders pattern, an inverse head and shoulders pattern, a rising or a falling wedge. And do you have divergence? It's wise not to trade reversals until you have doubled your account. This is not for the faint of heart. All right, so let's look at each one. Here's a channel, all right? So you can see I have it anchored on resistance, anchored on support, all right? And if we're trending, we need a less than 45-degree angle. Now, a channel could be considerably steeper, or it could be considerably less. If it's less, then it's most likely a corrective move, right? They must prove the heart line, as you can see right there, all right? They must show you that they know exactly where it is. See, most traders don't realize there are always two parts to a channel or a trend. There's the lower part to the heart line, and there's the other part above the heart line, all right? So most traders will just put a channel across the tops of these, and they think they got the trend of the channel, and the reality is they only got the heart line. All right, now you trade only if the pullback is behind you in the session, okay? So here's a pullback, it slows down, pulls back, okay? Here's a pullback right there, all right? So you can see after that, the currency never came back to that level, all right? So it doesn't matter whether it's 10 minutes or an hour and a half, it's not coming back to that level if the pullback is behind you, all right? So you can see up here, we could anticipate a pullback and then go again to the upside, all right? So now, in ranges, we can trade both ways. We can trade up, we can trade down, we can trade up, okay? So the market ranges 90% of the time. They may be very large ranges, but they are still ranges, all right? So both ways you can trade when that happens, all right? So you can see here that we have divergence, okay? So we're at the top of the range. So what could we anticipate, all right? We can anticipate that this is going to be either one more move to the top and then done, or it's already done and we're going down, right? See, you have to anticipate the market based on what the market is telling you, right? Here's a sideways move. Go to lunch. Don't mess with that thing, right? So in reversals, don't be early. Count the money in. They put the money in once. They put the money in twice. That means they're going to need a double top, all right? So the first money comes out on the first candle to the downside, as you can see, and the second money comes out at the next one. All right, so you can see here in the range, money came in, all right? So now you know, all right, that most likely we're going to have a double top, okay? We just talked about that. It might be over with, but now the chart says, no, you're going to have to go up one more time before you go down. See, anticipating the market is based on price action. Your slow stochastic, your RBI, your RSI, none of that's going to turn in fast enough, all right? They're all lagging, so they're not going to tell you what the market's doing. They lie to you. The dollar affects almost all pairs. I took this back in 2019. We were doing 6.6 trillion a day. Of that 6.6 trillion, 88% or 5.8 trillion was the dollar. All right, so you got to watch the dollar. If the dollar is going up, these are the correlations. Now, typically it goes in the same direction as with the width. That doesn't mean that it actually will do it every time. Just statistically, it will, the GA, the EA, the dollar CAD, dollar Swissy, dollar yen will go with the dollar, because up here, the dollar is the base currency in the majors, and down here on the exotics, they follow the dollar most of the time, right? So you got to know your correlations and memorize them. Now, once you know direction, where are the barriers to just going right up or going down? All right, so they're fibs from the previous move in that price area. There are also fib extensions, and they might be the fib sequence from the start of the move. All right, the job of a trader is to identify which one of those, and it may be a combination. All right, so you can see here these fib barriers to the upside right here came from this last down move over here. All right, so they are used in the up move. All right, so you can see you click from the swing high to the swing low on the fibs, and you get these lines. Then you stop. Do they know the lines? Do they know the lines? Do they know the lines? And you can see they knew the lines on the up move, because those were the barriers in the range. All right, so you can see they knew that line, they knew that line, they knew that line, they knew that line, and they knew that line. See, they know them. All right. All right, now remember, the space between those areas is uncontested. They almost always run them in one or two candles. All right, so there we go. This will take a few more. All right, here's a few more. See how the area, they don't stop. All right, they don't come back to the low. They just keep on going till they get to it. All right, they put another low in, and they keep on going till they get to it. All right, this time they blew right through there after a small pullback, and right to the line, and then right to the line. See, uncontested areas. Those are the areas where your trade is hiding. In a channel, all right, or in a range also, we find that first pullback, all right, 1, 2, 3, first pullback, we use a fib extension key, and we get these targets up here. You see, they know the 618, they knew the 1000, they knew the 1.618. If we bounce here, we're going up to the 2.618 up there. See, big wide open space that's uncontested. Now, it could also be the fib sequence, all right? So you start on the bottom here, you go up 55 from the bottom, the next one is 89 from the bottom, next one's 144 from the bottom, next 233 from the bottom, 377 from the bottom, so on and so on, all right? So you see, the market knows exactly where they are, all right? Because bankers use the math. What's wrong with retail traders? They don't use the math. They use their little stupid indicator, which doesn't work, all right? So you can see, they know it. They know it. They know it. They know it. All right, see? All right. All right. Now, the last thing is the ATR. Now, what I'm showing this right here is the ATR for the day, for that day was 120 pips. Right? Started down here on the 5 o'clock candle and went right up here. All right. All right. So there you go. Where did it go? To the pip, to its ATR, 120 pips. All right. Why did it do that? Well, we got a wide open space there. See that? But why did it put the extra in? Because the ATR was 120 pips. All right. And it was short when it hit here. It was short by 40 pips. So it went ahead and put them in. All right. So finally, where will you bail if the trade does not work? All right, so you've all been in the mountains and you've seen, this is for the trucks. We've got big payloads and their brakes go out. Well, if the brakes fail, they got a place here they can run off into. It goes up the hill, it's full of sand, and it slows them down and they don't get killed or kill somebody else. You have to do the same thing in the Forex, okay? So this is the bailed out level, right? As long as I'm above this line, I am a buyer. But once I break that line, if I'm in a buy, I exit my trade. All right. If I'm anticipating the sell after the double top, then that's my opportunity to the downside. But until it does that, this is the bailout level. Any trades I take to the upside, if you break this level right here, I'm out. All right. So you can see, with this information gathered, we can anticipate the market. All right. So after the pullback, trade the barrier break. All right, so you got to pull back here. Pullback is behind me. I break this break. Where am I going? I'm going to the next one. Now, you see it went up to the 618 and rolled right across there and eventually got enough trajectory to get to the target. Then we get another pullback. All right, so the next trade is after the pullback. Pullback's behind me. Break the barrier. Where are we going? We're going up to the next barrier right there. See that? All right, and en route to that, these are the places you move your stops, all right? So then after we get this pullback right in here, we go up and hit the target. So 3 great trades right there for lots and lots of money. What's the problem? Well, traders are clicking out for 5, 10 pips. They're not trading, they're gambling, all right? Same thing over here, all right? After the pullback, right here, here's the pullback. Well, where do we go? Up. All right. After the pullback here, break the barrier, we go all the way up to the top here. All right. Then we got another pullback over here. All right. Break the barrier to the top, up we go. See that? Another pullback here. Okay. All right. Pullback's behind me. If they decide to do the double top, all right, there's the wide open space. You see? All right. So it looks like a lot, but hey, this is what a pro trader does. They don't leave things to chance, all right? So they never use indicators except for a MACD, and they use that for divergence and convergence, all right? They never traded an area to the target that's got less than 55 pips because that's the Fibonacci sequence number. They use the data gathered to find the wide open space to trade because it's an uncontested area. All right. They commit to the target and move stops as they take out a barrier. Okay. And if you practice each piece, you will start to train your left brain to trade. The right brain can't trade. It's got creativity. Oh, well, I've made up a lot of trades. It's got intuition. Okay. Artsy fartsy. All right. Feeling. I got a good feeling about this, man. Oh, I think it's going up, man. I think it's going down. That's right brain stuff. Oh, it's going against me. That's feeling. That's an emotional response to the market. You don't want that. You want the trader, which is the left brain. It does the analysis. It does the logic. It uses the facts and the math to create a trading idea that you can follow, but it has to be trained. All right? The number one reason, in my opinion, that retail traders fail is not because they have a bad system. All right? It's not because of that. Right? It's because they haven't trained their left brain to understand the statistical probability of what they're looking at in the charts. Well, when you do it well, this is the kind of thing you get. You're just trading 3 mini lots here, okay? 7,000 pips still in. And stay in. As long as that channel keeps going, 20 days, 21 days, 20 days, 14 days, as long as that channel keeps working, I can still add positions, all right? So I'm Scott Barkley. I have two decades of trading and training experience, and I was a training consultant for FXDD. That was the second largest retail broker in the world at the time. I was there for 3 years. I'm the author of The Empowered Forex Trader, turning strategies to turn pains into gains. So you want to use our tools and training and come see this for free? Take a free test drive at on our website. And you can come in for 2 weeks, watch us do it. It costs you nothing. You'll learn a lot. Most people say they learn more in 2 weeks in our live room than they have in the previous 2 years. Hope to see you in the live room.